Hi, welcome to the CFO Squared podcast, chats about financial and financing optimization. I'm Karl Baker. This podcast is all about business funding, success, and strategy. We're here to help you know how to finance your business. We will also talk about other financial issues impacting your business and ideas to help you succeed and advance your cause. Now let's get into the next episode. Hi, everybody. Thank you for returning to the next episode. Karl Baker here with our CFO Squared chats about financial and financing optimization. Today, I want to talk about something I got in the mail recently. Do you get these? I recently got one of these big bank pre-qualification letters that say, get loan now. You're pre-qualified for up to so-and-so dollars with rates as low as so-and-so percentage. And when I read this, I read through the fine print and I just found it interesting. And I know a lot of people receive these, and there are actually strategic reasons to sign up for these offers, to understand what the cyber algorithms are telling lenders about your credit profile, interestingly enough, but it's still an interesting thing. And a lot of people are using these offers to try to obtain either consumer loans, personal loans, or even business loans. So I wanted to talk about it briefly today because it's a very opaque process. They do not put transparent criteria on there as to whether you qualify or not. If I were doing it and I were trying to truly be consultative, I would say, if you have this amount of income, if you have this amount of cash flow, this amount of time in business in your business, just some criteria that would make that a more transparent process, that would, to me, be a more genuine process. But they're trying to get people to actually reach out and take a shot with their process, and it is very opaque. These marketing materials are promising a fast process, quick decisions, quick funding, etc. And many people go for these, and I've used these offers to try to obtain financing. So it is an interesting thing, and I just wanted to talk about it today. So a few things. Nowhere in the materials does it say, again, how you'll be compared to their criteria. It doesn't have a matrix. It doesn't say continue if this, and this, and this. It's not trying to be consultative. It really is trying to hook you in. And for this loan offer, it will be similar to a credit card offer. They will largely make the decision based on your credit and your personal income. It is a business credit offer. So they will ask a few other things about time in business and what your earnings will be and how much you earn in revenue, et cetera. When I read through the fine print, just trying to understand it better, there were a few things in there that hinted and of course checked off their compliance requirements, that not everybody will qualify, not everybody will get the same amount. The range will be from $1,000 to $150,000. That's a pretty wide range. Somebody reading that is probably going to be attracted to it because they qualify or they're seeking $150,000, but they're very likely they will not qualify for the $150,000. Those are best case scenarios. They intentionally offer wide ranges. They're seeking the $150,000, and so they're going to get hooked into that. Rates in the fine print range from 3 to 42% on an annualized basis. Now they say it in different ways, but when you do the math and do the formulas that they apply, that is the range. And like I said, there are lots of caveats about credit history and other qualifying criteria, but it's very opaque. It is interesting. It does say that credit history will be emphasized in the analysis. That's more than just credit score. That's looking at things like number of inquiries, number of charge-offs, what your debt to income ratios are, how long you've had credit, how much you have in credit, how much of the credit are you using. That's what's involved when they're looking at credit history and credit profile. But on an overall basis, to them, this is a marketing piece, and they're trying to hook you in, and basically you're on a need to know basis before you apply, and you don't need to know until you do apply, and then we'll tell you. There's not going to be any consultativeness. There's not going to be any assistance. It's going to include a yes or no answer and no questions asked. And if it's yes, they'll tell you the amount. If it's no, they'll offer a vague reason as to why. But you are with these sort of applications, you are on a yes or no, or on a need to know basis, and they'll tell you what they have for you. Like I said, in this marketing offer, a person will apply and they may or may not qualify. And another point to make that is that even though they're encouraging you to apply, I've seen cases where once you do apply, not only do you hit the lowest ranges, but sometimes the lender will actually disqualify the applicant. So just because they say you're pre-qualified, it doesn't mean that they'll actually qualify you. Again, in years past, I have applied for loans or credit cards with these in response to these sort of offers, and I have been disqualified, and I've known others that have as well. So it's just interesting in that regard. Then what happens is you'll end up with, very likely, you'll end up with a personal inquiry on your credit profile. And whether you get accepted or not, that inquiry will be there. And most importantly, if you've done this several times, the number of inquiries on your credit profile could cause your credit to drop down further. And that's especially important if you get declined. Now you have an inquiry on your credit profile without a new credit line in your credit profile. If it's a personal loan, not necessarily if it's a business loan, but you very likely will have that inquiry. Actually, that's interesting. You will have that inquiry in your credit profile. And even if they accept you, it will be a business credit. So the open line of credit, the new line of credit, will end up on your business credit profile, and you'll end up with a personal inquiry, which could again, cause your personal credit score to decline. So even qualifying for a loan such as this could potentially cause your personal credit score to drop down a little bit because of the inquiry. As I've said, I've told many clients that have called me. We get calls all the time, small business owners, existing business owners, pre-startup owners. We get called all the time with requests for funding and basically saying they've went from bank to bank, or they've tried, they don't know what else to do. And it really is true that these sort of applications are a yes or no exercise with lenders. And we advise that it's better to take a strategic approach. When applying for a bank for a loan, we think it's best to try to know what the answer is before you ask the question. In other words, the stronger you are as a borrower, when you're the better you'll be. When you are applying, it's better to know up front that you probably are going to qualify for somewhere around X amount, whatever that number is. And that takes away some of the guesswork, et cetera. And I educate clients that depending on the financing type, we go back to the 4 C's: cash flow, credit, collateral, capacity of borrower, which includes many things. And we're trying to help clients find the best path. And that's what somebody experienced in this will do, whether it's us or somebody else. Having somebody help you find that best path will be the most beneficial, because lenders, when looking at those 4 C's, they'll weight those. Certain types of loans have a heavier emphasis on cash flow and credit. Certain types of loans have a heavier emphasis on collateral. Obviously, an unsecured credit card has no emphasis on collateral, et cetera. But just understanding that is important. Many times we receive calls where the borrower is looking for a loan. And after we understand the story, maybe they're looking for an equipment loan. Maybe they're asking for an SBA loan. But after hearing the story, we tell them the best chance of obtaining funding might be a different direction. It might be an unsecured line of credit. It might be a simple equipment loan. Perhaps it's what I call a cash flow loan, et cetera. So our job is to assist clients with understanding what the story is, understanding what the need is, and fitting that up, marrying that up with the right financing path. And that we think that's important and will help clients find that right path. We think it's fun. We love helping our clients, and we think taking that comprehensive look at the financing is the important and right way to do it. Many times people say, well, the interest rates for so-and-so path is too high, and we will help clients understand. And I've talked about this in other shows, taking that comprehensive look at the financing, not just the interest rates, but total costs and understanding the total financing costs over the course of the term is important to analyze when making those decisions. We're simply trying to help clients take some of that guesswork out, and we think this is interesting. When I received this piece of mail, I just thought it was an interesting thing that perhaps we could talk about today. I know that other people out there are getting these sort of offers and are trying to navigate through their financing, trying to figure out how to fund their either a startup business or their existing business, and they're looking for working capital or whatever it is they're looking for. And there's a lot of unknowns out there. And I know there are some unknowns with these sort of pre-qualification letters. So I wanted to talk about it today. And thanks for listening, and reach out with questions, comments. Let us know if we can help you. If you know somebody else that can help you, I think the most important thing is finding the right expert that will help you with your financing, and hope that resonated today. Reach out with questions. Thanks again. Bye-bye. And this concludes the latest episode of CFO Squared, chats about financial and financing optimization with Karl Baker. We hope you enjoyed the episode. Leave us some notes or comments or questions by reaching out to us via email or phone number. Our contact information is in the show notes, and we would be glad to try to answer questions, take your notes, questions, and comments into consideration for future episodes. Until next time, signing off. Thanks again. Bye-bye.